Welcome back to FinTalk, brought to you by Vermeg. I'm Jawad Akhtar, your host. So today we're going to be talking about SME lending, and I'm delighted to have me Gabriele Sabato, co-founder and CEO of Wiserfunding. Gabriele, just for those that don't know you, a bit about yourself and a bit about your company.
Sure. Yeah. Well, pleasure to be here. Thank you so much for the invitation. So, yeah, my name is Gabriele Sabato. I'm the co-founder and CEO of Wiserfunding. My background is really in risk. That's what I've done pretty much all my career. And I started Wiserfunding 6 years ago. Before that, I was working in different banks across Europe. So that's where basically I saw the need for providing sound SME risk tools for banks, for the whole financial system. And then we started the company in 2018, and I was fortunate enough to have my professor from my PhD, so a famous professor, Professor Altman, who basically was a pioneer in the risk scoring world. In 1968, he developed the first business credit scoring model, to be a co-founder with me. And so we started this adventure.
Fantastic. It's a great journey. Sounds like a great journey.
Yeah, it was really exciting.
SME lending is a big issue. We hear about a lot, especially in the economic environment that we're in now.
Yeah.
So I want to tackle a couple of questions I want to target towards you. I want to start off with what factors contribute SME lending to being a significant concern with the conventional banking system that we see today. Why is it such a big issue?
Yeah. Well, there are many factors, right? I guess the first and most important, SMEs are small companies, and as such, they are risky clients, right? Yeah. Riskier definitely than large corporate, and probably also than consumer. So that's something that is undeniable, okay? And the other side also is data. So when you want to lend to someone, you need to understand where they're coming from, what they look like, what's their risk profile. Yeah. And obviously to get to that point, in the past, you would meet someone, maybe go for lunch, go for breakfast, know the entrepreneur and the history behind it. So you would kind of build your confidence in that company. Today, that type of relationship lending is not feasible anymore, right? And so you need to try to use data to come up with the same view, the same confidence, and that's difficult. That's where a lot of financial institutions are finding really hard to, first of all, find the data. But data is out there, but then processing that data, understanding that data, transforming data into insights, that's the difficult part. Yeah. And so that's why SME lending has been suffering really since the financial crisis in 2008.
That's right.
Basically went down constantly, with the exception of the COVID period, where basically most governments around the world started to offer their guarantees. And so with that, obviously everyone felt more confident, and you could see SME lending going up again, supporting companies, but then dropped them dramatically. And it's really tough times if you think about it, for SMEs, right? We went through a pandemic, then energy crisis, inflation at the highest level in the last 30 years, squeezing margins, so working capital is really low. And sometimes payments don't arrive on time, and so you need to find a way to get going, because you still need to, pay employees and all that. So these are real difficulties that any small company needs to face every day. And without the support of some sort of financial tools, it becomes really, really hard.
Yeah, and it's interesting you touched upon. We started back in 2008 when the actual global crisis hit, and there was a squeeze on SME lending. But then, couple that with the pandemic, there was a shoot, with government back. With anything that's government backed, you're gonna, you have that comfort around that risk is now taken away, right? It's taken to the government. But now in an environment where we are seeing, the energy crisis, cost of living, everything seems to be overly more expensive, right?
Yes.
And then couple that with the ongoing regulation that we're seeing, currently. So the Basel regulations that are being implemented right now across the globe. How do you see that being a big impact? Because we already see the SME supporting factor at the moment as being removed from a UK point of view, but from Europe, it's still there. So
Yes.
how does that then impact that?
It's a bit of a strange choice, right? For yes, for the Bank of England and the PRA to go in that direction. Look, I understand, obviously, their objective is to minimize the systemic risk. And so SMEs, as we said at the start, they're risky kind of clients. And so obviously the supporting factor can introduce biases there and they may want to lend more, but that actually didn't happen. As we said, we didn't see banks lending a lot more to SMEs. I mean, you could see that for mortgages, obviously. There's massive concentration, but not for SME lending. So it is a bit of a strange direction. The supporting factor, just to explain a bit, is just a way to reduce the capital requirements for banks, right? So when they lend to SMEs, it would be a bit less expensive for them. They would need to put less capital against that specific loan. And that supporting factor was, I would say, key principle since the Basel II came, in early 2000, and there was always this supporting factor for companies with less than 50 million turnover, which we define generally as SMEs. It made sense because obviously they're more correlated. So when you see one defaulting, you may expect more defaulting. They're more correlated with each other. They're riskier, they're smaller, but at the same time, I guess they also drive the economy. So there is a trade-off there, right? Yeah. So removing the supporting factor, I've seen some numbers, may mean they say 45 billion less lending towards SMEs in the UK. We, with our data, have looked at that. We think could be higher than that, could be probably in the 60, 70 billion, the funding gap that can create in a moment where banks have already reduce dramatically the amount of lending for the economy and everything else. So that's a very dangerous step, in my opinion.
Yeah, we see the PM who's talking about entrepreneurship being, and SMEs being like a backbone of our economy. We're trying to encourage that. Stand on your own. Go off and do your own business and that. But when funding is so squeezed, it becomes difficult. And coupled with the cost of living crisis and everything becoming very much more expensive, and it's not just the cost of living; it's the funding becomes expensive as well. It's just and then to see in the current regulation to say, well, actually, we're not really going to benefit. So banks don't have the incentive then.
Absolutely. I mean, if you think about it, I mean, Wiserfunding operates across all Europe, right? So we see different things in different countries. So government guarantees, for example, in many countries across Europe, they've always been there. It wasn't something just for COVID. They've been maybe enhanced during COVID, but they've always been there, right? And that's not really the case here in the UK. So you've got programs now, the BBB, the British Business Bank, UK Export Finance, you can see they're trying to incentivize, put down more programs for SMEs. But in reality, what we see is that support from regulators, from government, is not at the same level as in other countries. I've heard also government saying, but we have the best R&D program. R&D, again, I think has been sometimes misused by companies, right? Just because, again, it's probably one of the few tools out there available to support you. Then, again, that's why we've seen from HMRC a lot of controls stepping in and claiming that there's been a large misuse of that tool, which is probably true. And if it's true, and they're putting in place more controls, then you also need to provide other tools, right? For SME, tax benefits. I mean, that's really not something that here, like when you start, when you hire maybe younger people, like I've seen a lot of different programs in different countries, and there are many here.
And we see that. We see that with the, there's a drive to make UK the centre of the world, the excellence of that. But, if I look at that, well, if I'm getting support in Europe, what's keeping me here, right? You're right. Should there be quid pro quo, right? So, okay, yes, we may not give you this, but we'll give you tax relief.
Yes.
Or we give you benefits that compensate, that outweigh, what the European government is offering you at some point. So do we anticipate there will be like exodus from the UK market and an influx into the European market?
Well, in a certain way, I guess we can say that has already started, right? I mean, Brexit has been something quite difficult for a lot of SMEs because obviously has affected the job market tremendously. So cost of stuff has increased and it's getting higher and higher. Now they've just raised even the threshold for skilled labor. So that means that it's going to be even more expensive to bring talents from outside the UK. So many companies have started to relocate. I think what is worrying and what I'm seeing is that happening also for very large companies. You probably have seen a couple of large companies leaving the London Stock Exchange for other stock exchanges. Yeah. And that obviously should, drive some thinking. Yeah.
I want to go back to there was a paper that your firm recently published, and it was quite some alarming numbers on there. And it said 34% of SMEs are at risk of closure due to funding shortages, and 28% face rejection. So I want to take that and say, we both work in technology. How does that, how can technology offer viable solutions to SMEs to stop that?
Yeah. Look, I think technology is the only answer today, right? And I always say that the pandemic was a terrible time for everyone, but at the same time almost made many people realize that, digitalization is the only way forward, right? And so I guess these numbers are alarming. As I mentioned, we see a lot of companies really struggling to survive at the moment. There's been a massive delay in payments, which creates that imbalance between debtors and creditors. So you need to pay, but you're not receiving payment, and working capital is really low at the moment. We see that every day. We analyze millions of companies every day in different countries, so we see that. So I guess it's alarming that in this moment, when they go trying to look for help, that help is not there. So the rejection rates from bank and non-bank lenders have increased for different reasons. Non-bank lenders are also struggling to raise money to lend. Banks are trying to invest their funds in other type of assets, and a bit less or significantly less, I'd say, into the SME world. So that's alarming. There was just last week a Treasury Committee published a paper that was public, and they're basically saying that the government needs to do more to, again, help increasing those numbers, help SMEs to access funding in an easier way, also understanding what funding is right for them, right? Because sometimes that awareness is not there. So financial awareness is important. Sometimes when you look at micro businesses, that is not there. You may not even know what is available to help you. And that's an issue. So going back to technology, I think, our companies can totally support that journey by providing the right type of information at the right time. Because at the end, it's always a question of allocation, right, of capital. And that capital, if it's allocated in the wrong way, then you're wasting resources. And even those numbers may generate losses for funders. So it's confidence, is improving that allocation of capital using the right level of data and technology. And today that's possible.
Yeah, and I'm glad, obviously, we're a technology firm, so if the answer is technology, then great, that's where we are. But you mentioned about capital and capital optimization. I know we'll touch upon that at the Vermeg annual conference, but we'll discuss and dive into that a little bit more, because now with everything being so expensive, capital is expensive, right? Yeah,
Very expensive.
SMEs are not charities at the end of the day, so you have to have a bottom line. So where do we then start discussing the optimization of capital and the benefit of that side? So yeah, I agree.
Yeah. And again, what we're seeing in the market, a lot of financial institutions focusing more and more on the consumer side. It already happened. It's funny, the financial industry is really one where you can see the cycles, and they repeat pretty much in the same way. So in the past, again, and that drove a massive concentration into mortgages, and but that's considered a good thing, because again, it's an incentive for people to own properties and all that. But at the same time, SME lending and supporting SMEs that drive the economy pretty much of every country should also be considered a good thing. So I think that link is missing.
Yeah, and we talked about that. And so kind of lastly, how do government policies and kind of regulatory frameworks influence the landscape of SME lending? On one hand, we're seeing the current government saying, go for entrepreneurship, go for this. But on the other hand, they're taking it away, right? So how do we, if we had to, had the option to do it, how do the government go about doing that?
Yeah, I guess it's a very good question. I mean, if I think of myself, when I started, obviously I came from the corporate world. I used to work in different banks, so never been an entrepreneur before. And when you start, it's really hard, right? You don't know much. And so I guess programs to support, to teach the right things, even how to open a VAT number, or do you need a VAT, or things like that. Yeah. These programs are important, and financial awareness should be one of these. So entrepreneurs should know themselves, not really using accountants, like what are the options. Banks, I have, in the history of Wiserfunding in the last 7 years, never received really any proposal from our banks. We got 2-3 banks, and they never came up saying, oh, do you need an overdraft, or do you need this tool, do you need invoice finance? That's a bit strange, right? You would expect them to come and maybe tell you why you may need that, how that can help you. That is not there, right? So I think definitely go back to culture, to awareness. That's really important to build that. And I think I see more and more done on the consumer side. Pretty much everyone today knows about, what's your score? If you're going for a mortgage, you're probably going to do some research there and see what your score would be. Companies don't do that. They don't understand what the risk profile is. They don't understand how that risk profile could be improved, and also what that means when they go potentially asking for funding to financial institutions. So I think all that would be really important.
It always comes back to culture, doesn't it? Culture and bringing that strategy back. You're right. Yes, the firm should be able to, say to you as an entrepreneur, by the way, have you thought about this, or have you seen this? And I think that's always been the biggest issue, is around access as well, and availability, not having it, buried so far in fine print that you're having to find loopholes, right? Aren't you? So, exactly. and you're right. You've gone from that journey. You've gone from being in a corporate environment to being an entrepreneur, where suddenly in a corporate
You're on your own.
yeah, exactly. In a corporate environment, we're looked after, right?
Exactly.
We have a
Yeah.
whole support network around
Yeah.
us. I have an issue, then I can go to this person. It's all laid out as soon as you start. This is what you need to do. This is what you
Phone this number, like
exactly. Yeah,
you won't have any number, right, when you start that journey, and that's a bit scary. So I think, it's funding, but it's also teaching what is out there. What can you do? Why data is important? Why should you care about your risk profile? Why should you care about the way you present yourself? What products are there to support your journey? Incentives from potentially government and all that. I think that part is quite missing.
Yeah, incentives is definitely key. Gabriele, thank you so much. I'm looking forward to talking to you at the conference, actually, to talk more about the capital optimization side of it and how we can, from a risk aspect as well. We're seeing a lot of that starting to now merge, lines of defense and everything like that. So, I look forward to, thank you for spending time today. And then, look forward to seeing you and speaking to you at the conference.
Same here. Thank you so much for your time.